Hello, Leo. How are you?
Rupert, very well. Thank you for having me.
Well, I think you're having me as much as I'm having you. But anyway, I thought it'd be great for us to sit down and just talk China generally. There's a lot going on at the moment, and we've had the recent NPC, the announcements last weekend on the consumption side. Let's have let's have a quick catch up on that and on some of the areas in and sectors that we've both been looking at a lot recently. Um, we were chatting just offline that it's now been 10 years since the Made in China 2025 central planning exercise was announced. And, if you go through a pretty objective scorecard in terms of what's been achieved, whether it's on EVs or solar renewable technology, um, frankly, they've ticked off most of the boxes. So those sort of naysaying central planning announcements when it comes to China maybe need to take a little bit of pause, but I'd love your thoughts on that.
No, absolutely. Looking at the breakdown of industries they were targeting for China 2025 and the industries where they've achieved meaningful results, it's like you're saying, you sort of list them and you think it's electric vehicles, high-speed rail, LNG carriers, drugs, graphene, solar panels, like all these things that we keep hearing that China is doing big things in, and they're actually quite useful things. So it's not just some random industry that they chose to dominate because they think it's a good idea. It's all industries that sort of circle back on each other and kind of support each other's growth. Now, of course, it's not everything, and some of the industries they didn't do quite so well in, like commercial aircrafts, in particular on the engine side, and arguably in semiconductors. Sure, there's been progress, but they've not sort of broken out of the American sort of hegemony there. But outside of that, they've done a really, really good job, and it's productive growth that, like you say, without giving too much credit to the planners, but it's productive growth that will contribute for years ahead.
Yeah, I think that let's bring it up to date, and I think that there's been a general expectation outside of this part of the world that any form of fiscal stimulus to promote consumption in China needs to involve sort of mail check style stimmies that we saw in the US and elsewhere. I think we've both been very clear that that wouldn't work in a society that has such a high propensity to save. But I wanted to get your response to the weekend's announcements around consumption. I mean, I know that there was some disappointment about a lack of specificity on numbers, but you did a really good job talking about that in one of your notes last week. And I thought maybe we'd just start there.
Well, I thought it was very important to understand what it is that the government is trying to achieve. But this, like you're saying, yourself, myself, and sort of most China watchers have addressed this notion before that the real limiting factor for the Chinese spending has never been the income side, right? It has always been the propensity to consume, right? This desire to spend. Savings rate has always been high, and the rationale for that saving has been looking after your seniors, and the fact that you can't exactly go out and leave your children in school domestically because of the hukou registration rules, right? So life in China, despite it being communist in name, is actually quite demanding on the working sort of Chinese people. And so you can kind of understand where they're coming from with the high savings rate. But given that that's the case, right? Given that the income side is done all right with one-off corrections for wealth effects from property market, sure. But outside of that, the income side is done all right, held up all right. The question was, how do you get people with that sort of a mindset to start spending again? And with that, you obviously need the economy to normalize, right? I mean, obviously, after the COVID shock, you needed to see normalcy, right? And that obviously took some time. But here we are. And the government's been talking about the fact that consumption is the focus for over a year and a half now, right, to varying degrees of intensity, but especially in the last half a year, they've been talking about it big time, right? They understand that domestic consumption can be a much stronger engine than exports, for example, because it works both ways, right? You don't need to rely on overseas partners. You're not beholden to them for anything. So it becomes an important engine, not just to improve the quality of life, but also to make sure that the sort of domestic side of the dual circulation model grows
Yeah.
faster than the sort of the external one. And so, given all that, what is the trajectory that the government wants all of this to take? And for me, it's quite clear that they want to massage people into comfort, right? To make sure that they understand that the government in turn understands their needs, which is why there's so much emphasis on things like pension reform and pension provisions, on childcare and childcare
Childcare. Yeah.
provision.
Yeah.
All these things that are surprisingly expensive in China are and in terms of pensions, surprisingly poorly provided, right? Are exactly the things that the government is focusing on reforming and improving, right? And sort of the pension reform comes in both flavors. You get the reform for current savers and improved payments to current elderly, right? I mean, so that way everybody's covered. Actually, you can even talk about the housing purchasing program, right? The government buying houses and then redistributing it to newer families, for example, is another way of sort of providing help where it's kind of needed and stimulating the parts that they want, like the baby helping, right? I mean, the baby payments and new family payments could be done in the shape of cheaper provided social housing and stuff like that. So in that sense, saying that you exactly need to spend, I don't know, 1 trillion yuan on program A and 1 trillion yuan on program B, it almost misses the point, right? The point is the government is directing this ship, right, towards greater domestic consumption through greater certainty for domestic consumers. And that's
Yeah.
the point. That's the goal.
I think honestly that the frustration around lack of numbers really comes from a frustration on the sell side, is in that you have analysts that want to
Mm.
start to take pieces of that spending pie and put it into their earnings models, right? And so I guess the next question that we really need to think about is,
Mm.
with the lack of a large round number at which to sort of divvy up amongst sort of sectors, you know, how long do we think we need to wait for some of the earnings, the upwards earnings revisions to creep back into the sell side models? Um, you know, frankly, these sell side models tend to follow price. So, I mean, we're seeing breakouts in quite a number of sectors right now. So, I guess it's just a matter of time before the EPS revisions start to snowball up.
Well, exactly, Rupert. Both you and I worked at big sell-side institutions before, so we know how that particular cat is skinned, right? So I would agree with you that the market performance will drive a change in analyst expectations, ironically, but also already we're seeing better than expected earnings come out from a whole bunch of sources, right? The consumer names, for example, you wrote an excellent piece on Chinese beverages over the weekend. And CRB has reported today, well, tomorrow, I suppose, depending on where you are in the world.
We
Uh,
should point out to viewers and listeners that Leo's talking in the middle of the night from the UK instead of being in his seat in Hong Kong. So he's a bit of a trooper.
mm, well,
Yeah, no. So tell me about what's hit the market this morning. This CIB.
yeah, CRB has reported excellent set of earnings, right? Way ahead of expectations, and well, I say way ahead, but almost for 4%. And I think the thing. The belief among the sell side has been that the only company that's able to turn around its business fortunes is Budweiser APAC, whether through strength of branding or managerial acumen, whatever. It's the Budweiser guys who are doing a good job, and everybody else is kind of stuck behind them. Well, clearly that's not the case, right? I mean, now CR is showing that without any of the things that Budweiser is doing, they seem to be able to get in on the same trend. That, to me, is indicative of a broader strength in the market that is just happens to be stronger than the sell side models assume, right? We're going to have Tsingtao report in a couple of weeks' time, and I feel like if Tsingtao also do the same thing, that'll give us three very strong data points indicating that actually domestic demand is already stronger than what's being talked about, right? And then if that were to be the case, then yeah, first of all, you get changes to analyst estimates, and secondly, all the multiples turns out are actually lower than we thought going into it, which in turn
Yeah,
will sort of
and
propel
we thought
another
they were
round of
pretty.
re-ratings.
We thought they were pretty cheap for the relative for the potential growth anyway. Sorry,
Exactly.
just to translate. CRB, China Resources Beer that we're talking about here, 291 Hong Kong, and
That's the
Tsingtao
one.
Brewery is 168 Hong Kong, and Budweiser APAC is 1876 Hong Kong. Um, I was pointing out the other day that the entire beer market cap is something like 40% of Anheuser-Busch alone, and
Yeah, which is
and Anheuser own 87% of the largest player in the Chinese beer market, which is
yeah,
1876. So I mean,
yeah.
I think we will see that coming through. I spent a bit of time talking about the Baiju players, which we won't spend much time on. People don't know much about the Baiju market, but just should know that it's 10 times the size of the beer market.
Yeah.
But one thing I did want to talk about, and I haven't seen any signs of this in today's announcement, is whether we can expect anything on the capital allocation front in terms of buybacks and dividends from some of these very cashed up beverage players. Um, the beer companies got $8.5 billion of cash, net cash on their balance sheets. The Baiju companies got $55 billion worth of cash on their balance sheets and are only currently paying about 3% of earnings as dividends. Um,
Mm.
I think that we will see capital allocation noise in these very well capitalized consumer players. It was the same thing with the consumer stocks. I looked at the retailers and the
Mm.
restaurant stocks and the white goods manufacturers. They're similar. Those balance sheets are in rude health.
Absolutely. I would only note that whilst they're big companies, right, and actually pretty liquid, even the second and third tier baijiu producers easily trade 500 million RMB a day, right? I mean, so like these
Yeah.
things are big themes in China, but they're not exactly the most forward-looking institutions out there, right? I mean, I think it would be unreasonable to expect for Baijiu players to be ahead of the game in terms of capital discipline, in terms of implementing the new rules that CRRC has proposed, right?
In
But they will catch up. They will get there, right? I think there's absolutely no question that they will start being better at paying dividends and maybe even buying back stock, right? I mean, I think if and when Mautai does that, everybody else will follow.
Yeah, ultimately, particularly the major Baiju players are classic SOEs in many cases, and in case of Maotai,
Mm.
it is the biggest piggy bank of the Guizhou government. So I mean, I'm pretty sure that
Yeah,
particular shareholder will be quite focused on return of capital as they seek to shore up finances. What I would point
precisely.
out I mean, I've had to and fro with several readers this week since putting out my piece. A lot of my readers don't play in the A share market, can't play in the A share market. There are a couple of very small ways you can do it through Hong Kong counters. There's a there's a small ETF on Hong Kong 3189 that tracks the cap weighted CSI liquor index. And there's also one smaller private sector baijiu manufacturer, also from Guizhou, ZJLD Group. They make the Zhenju beer.
6979. Yeah.
Yeah, 6979. And that's kind of like a high beta version of the
Mm.
liquor index. It's like a levered play on Maotai, both on the ups and the downs.
No, but it's lovely. I love your idea of having half in the basket and half in a single stock, right? Because it really does give you the oomph if sort of when things start improving. And
Well,
I have to
it
note
hasn't
that
worked so far this week, but hey, give it some
we'll get
time.
there. Yeah, like I will note that they do trade together, right? It's highly unlike them to have one of the Baiju players to miss out completely on any moves. It happens, right? But it tends to happen for idiosyncratic reasons, right? That particular player is struggling with a particular specific manufacturing issue or a government relations issue, whatever it is. But normally they all tend to move in unison, maybe slightly tiered. So like the first tier players go at one speed, and then the second tier players
And
either
then
go a
there's a
little bit faster or a
catch-up
little bit
trade.
slower. Yeah,
Yeah.
exactly. So it's like it's a fairly efficient market, if we can call it that, right, for that sort of thing. But I think that the next biggest catalyst for them would be the change in payouts rates, right? Either buybacks or dividends or both, right? And I will also note that I maintain my multiple lists sort of across Asia. And for the longest time, I have a line for United Spirits that just trades at crazy valuations, and they tend to get crazier and crazier and crazier, which brings up the averages to the point where the averages are not really usable anymore. And now I'm starting to note that the multiples for United Spirits have started to come down quite a bit. I mean, they're still crazy relative to Mount I, but all of a sudden you're like, well, A, it's sensible what's happening, and B, yeah, I mean, maybe we meet somewhere and we have like an Asian sort of reasonable average for given the growth rates that the Muay Thai guys are experiencing.
Okay. Just to pause for a second here. We should put in a word of warning that Leo and I don't plan to spend very much time talking about the Chinternet giants of Baidu, Alibaba, Tencent. Very much, I think we both feel that they're well covered elsewhere. Obviously, you know, Leonid runs a China long helps to run a China long only strategy. So they have to be part of his everyday life for benchmark
Mm.
reasons. But read about that elsewhere. An area where you've done a lot of recent work on is an area which I confess not to being super familiar with, at least in terms of some of the listed names, and that is industrial automation and more recently robotics, because I have a strong sense that humanoid robots in a sort of commercial format are more likely to come from some of these names than out of something like Tesla, for example. So, Leo, why don't you kick off where you've got to with some of your work so far?
Well, first of all, if I may, a quick plug. If you do want to read about internet stuff, I did actually do a couple of articles on that recently, so check out the sort of Panda Perspectives if you're interested. But yes, I am doing it from a point of view of a guy who has to be in them anyway. So the really interesting things, real good work happens in sectors like robotics, right? And I've started following the sector from about 2023 from afar, right? I mean, obviously, a lot of these names are newly listed, quite small, but growing quite rapidly, right? And the most interesting part of it is that yet again, we're dealing with an example of the central government, or in this case, meet the innovation industry, who have been working on a humanoid robotics program since 2017 and who have laid out the plan for humanoid robots in 2023. In November 2023, they've provided a detailed roadmap and timeline for when they want to see all these things hitting the shelves, right? And this is before Optimus was unveiled by Tesla. So,
Can we just
in
take a step back first, because industrial automation was obviously a much bigger thing much earlier, and I think the sort of genesis behind the investment in that area would have been much more to do with, you know, finding
in
viable domestic competitors to the Fanucs of Japan and some of the German
Indeed.
players.
So yeah, I think that's exactly right, and actually that's what I wanted to get to. That if you think about humanoid robots as being the pinnacle of evolution of industrial robots, but it also means this is the smallest market, right? And then if you go back and roll back to see where we are, right, and you can see back to the 90s, right, when Fanuc started to become like a big deal. It's robots are actually quite simple things quite often, right? I mean, we think of them as really complicated machines, and they are, but the actual actions these robots do, like the most common ones are cobots, collaborative robots, right? These are just single arm devices that do a particular action, right? A squeeze or a move or a mix or something like that, right? And you can use them for coffee making or welding, right? It really is that diverse in terms of applications. And then we have like the big CNC machines that we are used for like bending and shaping big pieces of metal, for example, or plastic, or making molds and things like that. So these are all quite customizable pieces of kit, right? But that also means that almost every industry could use them. So from custom car makers in Houston, for example, who have a CNC machine of their own, right? It might be smaller, slightly older, to state-of-the-art manufacturing facilities like the ones that make Teslas, right? All of them need some sort of machines that will mold, bend, put together, and weld. But the interesting thing is that the industrial automation sector enables things like dark and cold factories. So as you automate all of your production, you no longer need to have things like canteens or warmth, because robots obviously heat up as they work, and you don't need external heat. You don't need light, right? Because robots obviously don't need to quote unquote see, right? They use sensors and things like that. That dramatically cuts costs, and that cuts costs at a structural level, things that are not available to humans that work in facilities wherever they are in the world, right? It's not a question of salary at that point. It's a question of just not having like an entire chunk of your cost base, right? And we have seen that. Even limited applications of robotization bring big cost advantages, like with Tesla and Gigafactory, right? As you apply robotization to a sort of fairly well-developed process such as car making, you can cut out a big chunk of costs, right? In terms of processes, in terms of number of moves, in terms of size of units that you can sort of work with. All of it results in cheaper cars when we're talking Teslas, but that advantage applies to Teslas when compared to like Mercedes and Volkswagens. But when you're comparing them to slightly more modern production lines like that of Xiaomi, for example, all of a sudden you see that Chinese have taken it a step further and it's cheaper still. And in fact, every new factory in EVs that's opening up uses more and more robots, to the point that, at some point you have very few actual human employees, except a couple of engineers. They don't even need to be at the facility. They might do monitoring remotely at the headquarters or something like that, right? And which actually has a ton of very interesting implications in terms of regions or even countries fighting for.
Just before we talk about the implications, I mean, who should people be spending time getting fully up to speed, understanding? I mean, and I'd love to sort of focus on ideally eight share or red chip names specifically, rather than too many A share names.
Well,
If possible.
unfortunately, all of the robot names, like proper robots names, they all trade in the A shares, right?
Yeah.
Not all, right? I mean, you have some companies like Dobot, the one I mentioned earlier today in a note, right? That's a maker of actual humanoid robots and cobots, the collaborative robots, right?
Yeah.
They're
And
fairly
you've
well
got
established.
some second derivative names. You've got people that make the sensors and things like that, which you can
Exactly,
access.
exactly where I was going to go with this, right? The way to play it in Hong Kong is through people who make things like sensors, like the sort of the LiDAR guys are all the rage, but Hans Laser, for example, is another one, right? I mean,
Say that again.
any
Which one?
Hans Laser,
Yeah. Yeah. Yeah.
the sensor makers. Oh, but the palette is so much broader in A shares. Like it's sectors like these that you can really see. Like my big list for robotics is 104 A share names, right? And that's you do have people making everything from harmonic drives to well, forms and molds to actual bits and connectors and things like that, right? And they all come together to form a couple of end product makers, right? And of them,
Yeah.
Dobot would be the one who makes humanoid robots, and then we have companies like Easton and Efort that are well-known sort of Chinese robot makers, but of course not well-known outside of China. I would again say that it's interesting that you can focus on service providers and companies that make components for robots. And because companies that make components for robots are also the companies that make components for EVs and a bunch of other high-tech manufacturing names. So like Shenzhen Inovance 30124 is a very well-known name in that regard. Ningbo Topu is obviously another share name. But
Stop talking
again,
about 300 names. So many people can't
yeah,
buy them.
yeah, unfortunately.
Sorry, just
But
quick explainer on that.
mm,
A share stock codes that start with the prefix 300 typically have ownership problems for EU residents, for example,
EU
and
residents, yeah, not
and
allowed
they
to
and
buy them
they
at all.
they're
Yeah,
often on the restricted lists for US investors as well, given
yeah,
their
and
defense
uh,
relationship.
thankfully, Topu is 601, so
Yeah,
those with ability to buy A shares, you can do those. And again, I appreciate that these are not household names outside of China, but
yeah,
this is where the action is. And by action, I mean innovation. By action, I mean companies genuinely pushing the boundaries, right? And it's what we see following Chinternet names is a tenth of the innovation that happens. Like the thing that really gets me going is this notion that U.S. innovates, China copies, and no, in the hard tech world, China very much leads the way, right? And it's through exposure to companies like these ones that you really get to know and find out. I will say that some of these companies are really, really small, and even for me, right? And I tend to dig quite deep. But some of them are, 30, 40 billion US market cap. So again, Dobot, to keep using that as an example, is after today, and it was up 27% today, is a 47
yeah.
billion
We
US
missed that one. We're
market cap.
waiting for a pullback on that one.
Waiting for a pullback. But the thing is, it's only IPO'd in January this year, right? And I still have the prospectus lying around somewhere. So it wasn't obvious that something was going to happen immediately. But it was obvious that there is so much going on because you see all these news items and you see various sort of posts on Douyin or anywhere you look, right? This was about to break through, and like the egg has cracked, right? And that movement there is really exciting because it doesn't we're seeing a creation of a new sector right in front of our eyes.
Yeah, I guess we should talk about cars quickly, just because there's been a lot of big moves in some of the ADR names in the EV space this week. We obviously had that announcement about that 5 minute chargeable battery from BYD.
BYD.
It's obviously a topic that's close to my heart, hence that little model car over my shoulder over there. Um,
Mm.
I, to be honest, have been of the mind that it's the story has been BYD, and I tend not to get super excited about the other ADR names, which have had somewhat of a mimetic quality over the last few years. But I'd love your take, as you do traffic in all of them. Um,
All of
uh,
them, yeah.
yeah,
I
and
will
you've
I
written
will
well. You've
disclose
written, by the way, just to plug Leo's work. He's written very interestingly on all of the new age EV manufacturers, so the Niaos, the Xiaopungs, and the Li Autos. And please track down those notes.
by all means, they obviously they all probably need updating by now, but it's been what 4 months because the sector does move quickly. But my personal bias is that BYD is a real company because it is clearly growing. It's got revenues, it's got shareholders, it's got understanding its role in the world, right? It's going to be the world's number one car maker eventually, right? I mean, that's the path it's
Yeah,
on. I like Li Auto myself as an entity, as a company. I like the product, right? I mean, I think Li 9 is a beautiful car, right? I mean, it's great, it's comfortable, it's kids love it, it's great. But I also
I
understand
also think
that
they were incredibly smart to start with the range
the
extender EV as a
range,
product, while
absolutely.
everyone was so nervous about battery life and you know all
No,
of the
no
other
range
things that
anxiety there. Yeah.
curtail. And also, just in terms of cost of goods sold, they were able to get to net positive cash flow just so much quicker than the pure BEV players.
Yep. And also volume-wise, they were the first ones to properly scale, right? I mean, we talk about like Xiaopeng and NIO as though and Li as though they're like three identical makers, but Leota
No.
outsells the other two combined, right? And has done so quite quickly. So
Yeah.
well done them, great execution. But as I look at the market now, it's clear that BYD is choking everybody, right? I mean, the most interesting developments to me are now on the technology side of things. Is it
Just
possible that,
before with that, I think there's one risk factor that needs addressing on BYD, which is, that they're choking their competitors, but they're also playing pretty hard and tough with their supply chain. And is there any
yeah,
risk to the story on that front, just in terms of or borderline abusive creditor terms with their tier one and tier two suppliers?
I think that it's always a possibility, and that's sort of kind of where I was going with this because it does create an anti-BYD sort of group, right? And in fact, we see CATL buying into NEO, right? As an entry, it's not exactly an example of that, but this sort of conceptually is what we're getting at, where people in slightly different parts of the market are willing to help each other out in order to have a counterweight to BYD. So obviously, CATL is a bigger battery maker than BYD, but BYD is number two, right? So they're competing for that battery market, and CATL is entering the car market, and they're offering their own chassis to sort of if you fancy starting a EV startup, you can
Yeah,
now
we'll
go
sell
to
you the
CATL, and they
skateboard ready to
literally
go.
will
Yeah,
give you the
the skateboard. Yeah.
absolutely. All you need figure out where to buy some seats and an aluminum body, and you're in business. And so it's interesting to see them partnering with NEO because, like, what can NEO possibly offer to them what they don't have? And that's branding and also access to consumers, right? Because what they don't want is to be the purely industrial manufacturer because they can see that BYD is trying to absorb all this market themselves. So it's not like it's a simple life for BYD, but they've just been doing such a great job executing that for now, all these concerns are concerns for 2027 sort of thing, right?
And this new battery pack, this new charging capability, you know, I haven't seen much sort of in the weeds testing of that. I have people that know a lot more about physics than me that are telling me that that is on the bounds of what's physically possible. But I doubt they'd have made the announcement so boldly if they weren't pretty confident that they were there.
Oh no, and they're rolling it out in production cars next month, right? So clearly, it must have been tested, and
But I
Hanel
mean,
is the
aren't
first
there
one
sort
to
of
get it.
knock-on implications? I mean, what does a charging station that delivers that kind of voltage look like?
Have you seen a cable from Lee Mega? Right, the size of that thing, right? It's bigger than my two arms put together, right? So yeah, so it has to be something along those lines, right? Because I
Yeah.
obviously haven't seen it in person just yet.
So
But
is it so we're looking then at a kind of a sort of duplicate. I mean, you're basically going to have two slots on the car, one that can take this jumbo pipe, and
yeah.
one regular one that you would plug in a regular EV station.
But that's the case on Leotos, no? Right, where you can you get like on Megas that can either plug in the big one or one of them is formed into like
Yeah, yeah, yeah.
whatever
No, but
you
we're
know. No.
talking we're talking a whole new game when you've got these big charges.
But then an interesting point then becomes: at what point do we just decide whether we need charging or not? Or maybe the better option is to do battery swaps, for example, or maybe the better
Yeah.
option is to do um, some um, some version of the range extended vehicle that is even more efficient, right? And I don't know, right? Because if this is the fastest the charge can be, and it's 5 minutes, right? And it obviously comes with risks, right? Because obviously fast charging comes with like increased fire risk and increased
Yeah.
uh, dendritis risk and things like that, right? So you kind of at some point maybe we say that maybe the thing we need to be exploring is an alternative to charging. Or we come up with a solid state battery, which BYD has pre-announced, by the way. It's not in
Yeah.
production yet, but they're saying by 2027 it will be. And maybe with a solid state battery, all of this goes away completely, and then we can charge it faster still and just not worry about it, right? So
Yeah.
again, it's interesting because there's so many moving parts, and because there's clear getting this right, especially if it's one of the smaller players that finds a niche for itself. Getting it right obviously can yield sort of significant profits to those that do.
And so, where are you positioned now on the auto sector now? I mean, you've got a sort of a base load of BYD, and then you trade the smaller names a bit more
Um, BYD
tactically.
is so in publicly I do the 15 name portfolio, right? And
Yeah,
in this structure, I have 5 large positions and 10 small ones, which theoretically are tens and fives, right? But obviously that changes. And BYD is one of my large positions, as a Xiaomi, right? These
yeah,
two are my exposure to the sector for now. I also have a small position in Topu, which is a company I mentioned earlier, which is a maker of parts for Tesla and also Li Auto and a bunch of other
yeah.
sort of makers, but also a maker of robot parts. So that's it's a nice catch-all for the part of the market.
I like that. Yeah.
But I'm being quite open-minded here, right? It's clear that Xiaomi is the brand tech company in China, right? So that
Yeah.
it's sort of it's got still has a big like a phone and a laptop business and things like that, right? So
And
saying that is
wearables and things
and
like that. I mean,
wearables
it's
and all,
phenomenal.
yeah.
Yeah, it really is
So
phenomenal.
saying that it is my EV exposure is probably not particular.
Yeah, it's a bit cute.
Yeah. But a little, but they've done really well, right? And now they're announcing they're bumping up the production rate for Su-7s and U-7s, and it's they're going for 350,000 units this year, which is just fabulous. Well done them, right? What can you say? It's seriously well done, all involved. Um, but it does create an interesting race in terms of volumes, right? Because we're no longer at 200 manufacturers. That number is clearly coming down quickly, and they're merging and they're folding them into each other. And I think it's quite clear that we're getting to a stage where it's, your BYDs, your Xiaomis, your Huawei affiliated entities, your Geely Group entities, and there's not that much of the market left for everybody else, right? And as you scramble, it's like musical chairs, and the music is starting to slow down for a lot of these guys. And the question is, what's the end game, right? What is the cutoff point for an independent producer in 2028, 29 sort of time frame? My back of the envelope calculations suggest when Neo and Xpeng and Li were listed, we're looking at 450,000, right? You need to get 450K and you'll be fine, right?
Yeah,
Now it's acutely, I call it 888, so 888,000, but really it's probably closer to a million, right? I mean, it's probably first to a million is somebody who will stay in the market or get bought out at a reasonable price. Whomever doesn't get to a million probably gets bought out at high-fi valuations, i.e., at plant and
yeah.
equipment. So
Scraps. Yeah,
yeah, and
interesting.
which is why the neo investment community are sort of a little bit touchy about this because like they always question how is this wonderful company only trading at these valuations. Well, the answer is because it is an option at this point, right?
It's because there's a question mark around terminal value, right? It has
Yeah,
to be. Yeah,
is there any, right? Is
yeah.
their IP worth anything, right? Like it might be, it might not be, and that doubt is what's causing the price to go down, right?
Interesting. Well, listen, Leah, I think we should wrap it up there. We promised to keep this sort of bite-sizable, but we will do this thing again for sure. I mean, there is. I mean, I've got a long list of places where I want to be, and as we talked about before, you know, the way to stay in trades in emerging markets, but in China specifically, is to try and avoid as much beta as possible. I don't
Yeah.
like being shaken out of shaken out of trades by vagaries of hot money flows, and we're gonna see that. I do see money coming back into Chinese equities in 2025 in the same ways it did last year. I think it will accelerate, but from one of the things that just on that one of the things that's still puzzling me is the short interest in the MSCI China ETF FXI.
Yes.
Is I looked at it
Uh,
yesterday. It's at 50. Is this just everybody hedging their bar long, right? Is this
I think it has to be.
yeah. So it's
Um,
it's a bunch of pod
Rupert,
shops, long bar, short FXI, and
will you permit me a very quick rant?
yes,
That
go rant
I think
away.
I think the most annoying part about investing in China is the fact that there isn't a good index, right? There isn't a good index product and there isn't a good index. And I think people get confused by the FXI and the K-Web that it's
Yeah.
somehow investing in China. It's not. It's investing in a particular pool of stocks that sometimes works, sometimes doesn't, but it certainly doesn't give you the same sort of exposure to the domestic market like the S&P 500, for example, or even the FTSE out here, right? So and with having said that, it's not clear that the situation will improve, right? Because of the different liquidity pools, because you have the US listed names, because you have the Hong Kong listed names and the H share, and within the A shares, and within the A shares, you have the 300s, the 600s, right? You now have the Beijing Stock Exchange, right? Thankfully, they've canceled the Chongqing Stock Exchange project, but like you literally have all these separate pools of liquidity, so it's very hard to bring them under one roof. So things that
Surely, if
you know,
Texas is going to have a stock exchange, Chongqing should have one too.
oh, no question about it. But we've barely digested the Beijing one, right? I mean, give us
Yes.
at least a year before you throw a new one at us. But I would, I'm thinking that things like long Baba, short FXI, right, is an interesting pair that
But
works,
it's not
but
really a
also
pair.
it's not really a pair, right? It's like it's a really weird concoction. And I would like to highlight this to sort of everybody that I know that it's not front of mind for most people, but using Chinese
we'll
index
make it
products
we'll
is
make it a
great for when
common
using a
cause.
specific thing. Like,
We'll make it a
oh yeah,
common cause,
uh,
Leo. Yeah.
yeah.
Well, listen, to everyone watching, please make sure that you are on Leo's distribution list, and I encourage everyone that's on Leo's and not on mine to hop on board and check out the Squirrel.
Uh,
Leo, thanks very
Please
much.
do.
Let's try and do this a lot.
Um, Absolutely, I'm always happy to.
Okay. Thanks a lot. Take care.
All righty, thank you, Robert. Bye.